Hey everybody, James Cordes here with the Mora Group. It is halfway through August 16th, Friday. Hope you're doing well. Thanks for checking in on this mid-month market update. Let's jump into it. Well, as you probably saw from the email, economic data was pretty kind to us over the last couple of weeks. You guys obviously saw our last update. We saw rates as low as they've been all year a couple Fridays ago. Those bumped back up. A little bit was just a market correction. Basically, it's worth noting that there is going to be a bit of a floor here as we see rates start to come down, as we see improved economic data with the inflation reports, and as we move towards a Fed meeting in September, where we anticipate a Fed rate cut. It's worth noting that they're not just going to continually move down until we're in the fours or something like that. There likely is going to be a floor on this rate movement, and we saw that a little bit last week. This week, we got CPI and PPI for July. Both of those came in very favorably when it comes to inflation numbers and the bond rate market. Inflation continues to cool at an expected rate. However, July's unemployment numbers did come up they came in lower than expected. I think 227,000 claims. They were expecting around 234,000. So unemployment came down a little bit. Retail sales for July came in a little bit hotter than expected. So those two numbers from yesterday essentially had a negative impact on the bond and rate market, and we saw rates touch up just a touch after having a pretty good week. So you'll see those rates on the rate sheet. You'll also notice on that market update with the rates, I added in their refinance rates. We also added in non-QM rates. I mean, realistically, our non-QM products are some of the most popular products out there, whether it's bank statement loans, asset qualifiers, DSCRs for investment properties, anything like that. So you'll see all the rates in there. The biggest thing happening right now in the real estate world are the byproducts of the NAR settlement. If you're a realtor, if you're in the real estate world, you know that these are having that settlement is having far-reaching kind of consequences to your business model. We're seeing that on the lending side as well. I'm fielding a lot of questions about buyers' commissions. How are we going to get those paid for? Can they be financed, so on and so forth? So let's dive into that real quick and talk about where we are right now in that respect and where we might be down the road. So currently, in the business model we once knew, when a buyer goes to buy a house, the seller is going to be paying for the realtor's commission. That's typically how it's worked. Since the NAR settlement, that business model has shifted a little bit, where the seller does not have to do it, and more importantly, sellers are now more aware that they don't have to do it. Likewise, buyers are now signing agreements with realtors that they're working with, saying, if you use me, you might have to pay X amount. Maybe it's a flat fee, maybe it's a percentage, what have you. Everyone is figuring out that business model. One question that we're getting a lot is, can a buyer finance their realtor's commission? The quick and easy answer is no, not right now. For that to change, that would have to be a fairly significant change in lending guidelines, and I don't anticipate that occurring in the next week, couple months. That's a significant change. It'll probably take some time. The best practice that we are seeing out there is that buyers, on their offer price, they are bumping that offer price up a little bit and asking for seller credit to pay for their agent's commission. For example, let's say they want to buy a $500,000 home, and that commission is $15,000 for their buyer's agent. So maybe they offer $515,000 and they ask for $15,000 seller credit to cover that buyer's commission. It's worth noting that commissions for realtors have really always been baked into the purchase price, right? When a seller goes to buy a house, they know I have to pay this much in my seller's commission, I have to pay this much in my buyer's commission. So that purchase price, that list price, tends to have those commissions accounted for. Now, if the if the sellers don't have to pay for that buyer's commission, hopefully that list price is shifted in a way downward because they don't have to account for it. So that's where you're going to get essentially a balancing of these two things, and maybe it won't inflate these home prices as buyers ask for selling costs and credits. It's a fairly significant change. Ask any realtor right now how it's going, and they're telling you about these different forms and all the meetings they're sitting in and everything that they're dealing with to figure it out. The bottom line is we're all in this together, trying to make it work. And there are going to be avenues and there are going to be conversations and there's going to be ways to make this work for buyers. But it's certainly a fluid thing right now. And how we are right now might change in 2 months. 2 months might change in a year and so on. So we'll see how it all plays out. But that's where we are currently with buyers, agents, commissions, and the NAR settlement. go ahead and reach out if you have any questions on anything. Otherwise, thanks for checking in. We'll come back to you in September, and we anticipate a September Fed rate cut, so that should be some good news next month. Thanks for checking in. Have a good rest of your August. Bye.